I want to give a quick introduction to our conversation. Uh, Entrepreneurship, small business has been for many years, for decades, a centerpiece of the American dream. And the American dream, though, has been about the ability to acquire assets, build wealth, and provide financial security today for families, as well as being able to pass along wealth to future generations. Home ownership has been a default path to generating that wealth for many low-income, moderate-income immigrant households for many years. Starting a business, again, has been another one of those paths to asset building. In theory, the American dream has also long been a myth and a challenge for many communities of color who have been systematically excluded from systems of building wealth and ownership. So the question we'll explore today with our guests is, in today's economy, can small businesses and entrepreneurship still provide a pathway to financial stability for low-income families? If not, what is needed to make this avenue a viable path to wealth building? So we have an outstanding panel with us today with some of the most experienced and respected voices in the Commonwealth on small business development and impact investing. And I'm going to introduce everyone very quickly here. So Edgar Darty, Vice President, Relationship Manager at Berkshire Bank, Revix Labs. Revix Labs supports emerging entrepreneurs, artists, nonprofits with co-working space, community connections, and banking needs. We have Jen Fagel, the co-founder and executive director of Commonwealth Kitchen in Dorchester, a pioneering food business incubator, a small business assistance provider, and shared kitchen space. Betty Francisco, CEO of the Boston Impact Initiative, an impact investment fund focused on economic justice and addressing the growing wealth gap and ecological challenges of our times. And Steve Grossman, CEO of Initiative for Competitive Inner City, ICIC, an innovative organization that drives inclusive economic prosperity in under-resourced urban communities through innovative research and programs to create jobs, income, and wealth for local residents. Thank you all for being here. I'm going to start with Betty because I know she has to leave us in not too long a time. So I'll open up with the core question at hand this afternoon. Is small business entrepreneurship actually still a viable path for low-income households to build wealth and achieve the American dream? Is this real, Betty?
Oh my God, of course. Absolutely, it's real. This is why all of us on this panel do the work we do every day, because we fundamentally believe in the ability to build your assets, your net worth, to have upward mobility for families and workers through entrepreneurship, through business ownership. So yes, absolutely. The reality is though, so when you look at, say, low-income individuals or businesses owned by people of color or immigrants, the issue is that you often start off with less wealth, less assets in order to build that business. And that is part of what we're all here to do, is figure out how do we build up the ability to start off businesses in a way that creates resilient, sustainable, long-term growth, because they start off undercapitalized and underinvested in, because the other reality for a lot of these business owners is the difficulty with accessing traditional capital, right? So for example, the rate of business ownership, right, for Black and Latino entrepreneurs, as an example, they're starting businesses at either the same rate or a faster rate than white entrepreneurs. However, because of the challenges with scaling up, they're less than half, right, of the number of Black and Latino businesses than there are white businesses. And then nationally, when you look at the stats around raising capital, here in Massachusetts, we've calculated through a report that the Coalition for an Equitable Economy did, a $500 million capital gap for entrepreneurs of color, just in terms of credit, in terms of debt capital. And it's significantly higher in terms of what we call equity capital. So it means there's an unmet need that's not being solved right now, right, for entrepreneurs of color. And that limits the ability to grow, it limits the ability to add new jobs. But there's no question that this is one of the most, entrepreneurial segments of our economy. Everything like immigrants, Black, Latino entrepreneurs, Asian entrepreneurs, and for low-income families, right? It's oftentimes the faster way to gain income because you may not have access to a traditional job. You may not be in these higher paying corporate roles that have sort of the safety nets of health insurance and 401k plan. So it's a fast way to gain income, but it's a limited way to gain income. So long story here is that one of the things we focus on and all of our fellow panelists are focused on is how do we get these entrepreneurs more access to the resources they need to start off strong businesses and scale up. So that is capital access. It's knowledge capital, right? The ability to know how to run a business effectively. And then also the social capital that is needed to effectively gain customers, right? To gain the kinds of customers and contracts that you need to scale up that business. So I'm a big believer, and yes, this is a viable path, for wealth building in our communities, and one, frankly, where home ownership is a starting point, but business ownership and ownership in general for workers is key to economic growth in our Commonwealth and in the country.
Thanks for that. One of the things that we know has been at the center of a lot of these conversations is access to capital, right? And one of the questions I posed at the beginning is, do the right types of capital products or loan products exist out there to make sure that the entrepreneurs that you all are working with are really finding the type of support that they need given their unique circumstances? Betty, you outlined a lot of the unique challenges that the entrepreneurs you're working with have. Steve, do you think the right types of capital products exist right now?
Well, the good news is there's a much wider array of products out there than have ever been out there in the past. That's good. The bad news is that if we're really going to surge forward, Betty mentioned the Coalition for an Equitable Economy. They just put a proposal in front of the legislature for $1.1 billion. This is of the $5 billion ARPA funds, the American Rescue Plan funds, that the legislature is going to have to spend. And they're calling for $1 billion proposal. It may sound like a lot of money, but it's essential. It calls for grants on behalf of the Commonwealth of Massachusetts to these small businesses, lower cost loans, equity investments, expanded technical assistance. So there are a lot of sources of funding out there. But as we know from the PPP, the Paycheck Protection Program, when lower income, overwhelmingly businesses owned by people of color went for PPP loans at the very beginning, when 40% plus of the Black-owned businesses, just to use one data point, shut down. I mean, this is a crisis we hadn't seen in 100 years. If you didn't have a concierge relationship with a bank, if you didn't have a relationship with a bank, you had no chance of getting the money. Later on in the process, when some of the smaller institutions, what are called CDFIs, Community Development Finance Institutions, and others got into the act beyond the traditional banks, more money was available. But capital is critical, as Betty said earlier. Even if there are a wide variety of sources of capital, these businesses are under-resourced in many other ways. Technical assistance, mentorship. They didn't go to the schools. They don't belong to the clubs. They don't have easy access to customers. So what we have to do is level the playing field. And one of the things we're absolutely got to insist on is that the buyers, the big buyers, the anchor institutions, the Commonwealth of Mass, the City of Boston, colleges and universities, the EDs, the educational institutions, the MEDs, and we have so many of them around here. These large anchor institutions need to make a clear commitment that they are going to be buying more goods and services from BIPOC-owned businesses that are qualified, that can deliver service, quality, value, and professionalism. Because all the money in the world is not going to help unless these buyers are willing to give them a decent shot at competing on a level playing field to get the business opportunities they desperately need to grow revenue, to grow jobs, to grow wealth in those communities that have been left out and left behind for generations.
Absolutely. Thank you, Steve. That's critical. And there's some good links in the chat that are being dropped in here. I'm gonna want to bring up something I was mentioning before. One of the commonalities between all of you, the work you're doing in your organizations, is you're not just connecting small businesses to capital and into financial resources, but critically, and we talked about this on our pre-call, critically providing support, coaching, mentoring, and community connections. Edgar, you work for a bank, but at Rebix, one of the most important things you're doing is connecting people to community. Can you talk a little bit about that and the importance of it?
Sure. Thank you for having me. Yeah, so our mission at the Rebix Lab is to advance the economic well-being of the community, businesses, and organizations by bringing people together through advocacy and partnerships. One of the main missions was for us to bring in organizers and bankers together to bring that synergy in order for them to be able to understand the language that's being spoken on both sides. So I myself, as a banker, being in the banking industry for over 15 years, our mission has always been able to bring in the client, sales. Organizers were like, hey, there's a disparity in this, just sell, because if there's a default or something, you're going to come after us. So we've created this space at the Rebix Labs to communicate and seeing why and how we can work together to not just provide a solution for the business owner, small business owner, community organizer, but to create language and also create, again, as I said before, that synergy. So we're working together with our partners, brother and sister partnerships out here in the field, so we can all come together and provide solutions that's going to help, especially in this current time. The wealth gap is real. The effects of COVID and thereafter is certainly real, and it's going to definitely have long-term effects that's going to ripple throughout and throughout the city, throughout the nation. And so with that language, that partnership is definitely needed. And so we at the Rebix Labs in Roxbury and in Springfield, our new sister foundation, are here to help the folks navigate those waters.
I want to get to the impacts of COVID and protecting small businesses in a moment, but some of this, makes me think, Betty, at Boston Impact Initiative, you all talk about the idea of using a whole portfolio approach, which sounds a lot like kind of, more than just being a banker, as Edgar's saying, is just providing a loan product, but being holistic in your thinking. Can you talk about that and what it means to the businesses that you're working with?
Sure. Yeah. So, we view ourselves as a relationship-driven lender or capital provider. And part of, sort of the building up of this relationship of trust, right? Because we don't, just to back up, when we allocate capital, which is a plethora of resources, so it's both debt, right? And that means it could be a term loan or a line of credit, as an example. It could be an equity investment. We use also really creative products like receivable financing or royalty finance, depending on the needs of the business at the time. And we don't take personal guarantees or do credit checks, right? So we are lending or investing with a very different underwriting lens that, say, a traditional commercial bank may be more restrictive, right? So we view ourselves as entrepreneur-friendly capital, but it takes more time to build those relationships with the entrepreneur. Sometimes there's a bit more diligence or a bit more pre-investment technical assistance necessary to help the entrepreneur really understand their financials, right? And how they're going to get to the growth that they're looking for, so that, again, we're not infusing money into something where, we haven't taken into account other challenges that this business needs to address, right? So that's part of, the building the relationship and establishing the trust. And then, we're trying to take sort of what we call this, holistic approach, because we know the business doesn't only need the funding to begin with. They also need access to other investors. So as an example, we made one investment into an awesome food business up in Lawrence that wanted to create a very healthy food option, in that area, which is a food desert. But our investment alone wasn't going to give her sufficient capital. We had to what we call syndicate, right? This transaction. So we were able to partner with 2 other lenders to be able to get her enough capital and then connect her to other resources, right? And I think, Jen, you've been involved with that too, like connect her with, other knowledge resources as an example. When you start a brick and mortar business, you need lots of other supports, right? Around opening the business on the ground, like leasing help. You need, construction support. You need connections to the maybe, if there's state level permits, but definitely your local permitting can take a long time unless you have the right political connections. So all of that is the ecosystem approach or the holistic approach. And then also we want our entrepreneurs to work with each other and support each other, right? So we try to connect them as much as possible. Like, one other investment is a videography company that does storytelling. And that company is now doing TA for our whole portfolio, right? So it's supporting the marketing and exposure for, our whole portfolio. So part of this is to build a local ecosystem that's strengthened by the players within it and that are supporting each other.
All right.
Yeah, and Jen, I would love for you to chime in on that, because you've done tremendous work, not just connecting, entrepreneurs to support each other, but our corporate anchor institutions, right, to play a significant role there too.
Well, Jen, I want to get to you. You can answer that question, but I want to ask another. I want to get a really important one here, which is Edgar mentioned COVID, the impacts of COVID on small businesses. I don't think there's any other category of small business that was more adversely affected than food and beverage, hospitality, restaurant, community, and industry. These are your people. This is who you work with day in, day out. I think you could probably do an entire panel on what you've learned from this experience. But looking forward, are there things that you can pull from that, your learnings, that we should be applying and thinking about proactively for the next major shock that can really devastate small businesses, whether it's another pandemic or it's something else? It could be a natural disaster or just a normal cyclical recession. What do we need to be thinking about to support our small business community, especially BIPOC small businesses and those who are run by immigrants and lower income, moderate income households?
Well, that's an easy question, Gustavo. Thanks for that.
I know, I wanted to throw you a softball.
Oh my Lord, that's hard. Yeah, look, we've been working largely in with a lot of BIPOC-owned restaurants for the last year and a half and have seen some pretty serious devastating experience. And I think, we are going to see way more closures and bankruptcies in the next 6 to 12 months. And so it's heartbreaking to think about, which is why the advocacy work we're all doing is really critical. I think for me, it also just kind of, puts a bright light on what we already knew pre-COVID about in the food industry, but across low-income businesses, businesses of color, immigrant businesses, undercapitalized, under-resourced, under-networked. That is not resilience. The way you build resilience is what we are now doing. And so where I have hope is the work that, Betty and I have been in more meetings in the last year and a half on Zoom than I can count, of doing coalition building where we are working across our capacity, right? So we talk about, you've heard it in different ways. We talk about human, social, financial capital. Any business owner needs all three to be successful, no matter who you are. It is particularly difficult when you are a person of color, an immigrant, English isn't your first language, you lack those networks and relationships. And when we just do one of the things, it's not just about capital. There's not an entrepreneur that any of us have dealt with who didn't say, I need money. And usually the response from us to them is, yeah, but what we actually need is business advice, financial support, technical support. And so like some of the things we have seen in the last year and a half is like how many of our businesses really don't know their finances. We thought they did. Several of them have gotten loans from Berkshire Bank, from Boston Impact Initiative, and Like we all did our due diligence and thought those businesses are really strong because they'd all been part of it. What we didn't understand was kind of the level of nuance that businesses were going to need to know to be able to be resilient in this moment, but also how incredibly important it is for them to have their own networks where they have their own peers, relationships, professional staff that can come in and support them when they need it. When you need the lawyer, when you need the accountant, when you need the bookkeeper, when you need the marketing person, when you need the digital strategy. And that historically in the world we are all in, it's very siloed. And so it's on the business owner to figure out what they need and when, and to go find those things. If you're a small business owner that is already undercapitalized and largely with a very small team, right, 5, 10 people or less, figuring out how to maneuver that is incredibly challenging. And so the more, if we want to think about resilience in the future, the more we can continue to deepen the relationships and connect the dots of the service providers, the technical support people, the government officials, the bankers that are involved in this, the more likely we are going to be much stronger in supporting those businesses. And for those, honestly, for those businesses to have what they need and for them to have the agency to take on whatever the shocks are themselves. Because really, ultimately, isn't that the goal here? It's not about us as service providers, it's about those businesses having what they need when they need it.
Two different times it came up around connecting small businesses to contract opportunities at large institutions. Steve brought it up, Betty, I think you just brought it up as well. Jen, I know that some of your businesses during COVID, during the acute moments of COVID in the first few months, were doing emergency food assistance. Not exactly a lucrative contract, but perhaps an entry point into ramping up into those types of contracts. Are there things that we should be looking to replicate going forward with, those are potentially really valuable contracts where if you can go to a lender and say, hey, I have this contract lined up, it could be quite helpful.
Yeah, so this institutional work is stuff we've been doing for the last, 3 or 4 years. So think about in the world of food, where do people eat? Well, we eat at restaurants and we eat at home and grocery stores. And pre-COVID, we all did a ton of eating in our offices, in our classrooms, in the hospitals. And so for us, it was trying to understand, how do you take a business owner that might have a product that might be unfamiliar to somebody who looks like me, Haitian pickles, African peanut sauce, right? Mexican mole, whatever that is. How do we help educate and make connections for our business owners so that they can start to build that market share, that we can get them to a place where now I can go to Betty, I can go to Edgard and say, you guys, I have a great business and they have a great contract or relationship with Harvard or MIT or Boston Children's Hospital, all of whom are organizations that we now work with. And so for us, that strategy has been, well, how on earth do you get a product on a menu at Harvard Dining? How on earth do you get a business owner selling in the food court at MIT? Two examples that we've actually worked on. And this is a larger question in small business of how do we actually solve the procurement problem? Because we all talk about this and we've all seen the statistics in the city of Boston at how we know the intention is there, but man, the numbers are terrible. Same thing at the state. Why is procurement not better? Why are the numbers not look better? And honestly, for us, we keep saying it's about action, not intention. And the action is because the work is like, how does the contract work? How does the procurement work? Who has to make the decision? When is it? How does the pricing work in this situation? What's the time? It's being in the weeds. And what you need is organizations that are willing to do that kind of being in the weeds. And the way we think about it is, how do we turn one opportunity for one of our businesses into an ongoing replicable opportunity? So how do we take getting jerk sauce on the menu at Harvard University into 3 or 4 of our companies integrated into the entire year's menu? Because now you go from a $10,000 order to a $100,000 or $200,000 order. Now that business is in a different place. They have confidence, they have networks, they have connections, they have access to finances, and in the world of food, they are also being able to get to a larger scale, so their pricing starts to get better. So there's a lot to the why that matters, but the issue in doing this work is the alignment, and how you get value is alignment all across everybody who's involved in these conversations. And so we know that there are urban champions in lots of organizations, but if it's one champion that's there, that is not systems change. And I think the work for all of us is figuring out how we can dive in more deeply to demonstrate that, in fact, you can do this in a way, what we're doing at MIT, we just put 3 businesses of color into the food court. They have taken over the food court. Turnkey, they could walk in, bring their pots and pans and start selling. Students at MIT use their dining card to buy food. So when does that happen, that a business does not need all that capital that they typically need, that's very hard to get, to walk in and actually start selling and to have a guaranteed audience that they can sell to? That is a
Huge.
powerful model that we
Yeah,
think can
huge.
be replicated. And so I think the more we are all thinking in that way, the more we can continue to connect those dots and connect how the network can work together. Because that is when I can now turn around to Betty and Edgard and say, man, we can leverage the heck out of this, because now we have businesses that are much more ready for the kind of capital that you guys can provide.
That is absolutely huge, those opportunities. I want to make sure we're leaving time for questions if there are any, and maybe someone who's in the room can kind of give us a wave and or message us to give us a time check. But Steve, you brought up a really interesting point on our pre-call around the role of community development, financial institutions, CDFIs, and what you're seeing in the 20 other regional regions that you work in at ICIC, and the potential for CDIs to really move the needle on this, and perhaps a gap you're seeing here in Boston. Can you speak a little bit to that?
Well, yeah, we've seen in other communities and other regions of the country a far greater development of what we call CDFIs. And, the banks just reported this week record profits, massive billions of dollars of profits, every major bank in the country. Well, those banks have some limitations in terms of whom they can lend to, how they can lend, collateral issues. It's a bit challenging for a bank to make loans. But when they take money, and because of Community Reinvestment Act, they've got to put money into diverse communities, into communities characterized by high levels of poverty. They must do that in order to have a satisfactory Community Reinvestment Act rating. So they put the money into what are called CDFIs, and these CDFIs have a somewhat different set of standards by which they can make loans. And in addition, they like to provide technical assistance to those companies that they do decide to finance. And I would like to see a far better developed network of CDFIs in this region than we've seen so far. I mean, look, we know some of the issues that have faced businesses of color for years. Systemic racism, the Federal Reserve Bank did studies, Black-owned businesses getting turned down, more 40% more likely to be turned down than white-owned businesses in one study they did a few years ago. So we need to level the playing field here and create an environment in which capital is available. One of the reasons in our Inner City Capital Connections program that we synthesize education, coaching, and capital is that you need all of those to work together. It's a holistic approach. You need to teach a small business owner strategy, marketing, entrepreneurial finance, team building, leadership, talent management. These are all things you need to know. So we require every small business owner we work with to identify their pain points, and then we assign a coach, an individual who can help them deal with their pain points. So think about all the retail businesses in under-resourced communities during COVID that were used to selling 100% of their products over the counter. Now the store is closed. You can't sell anything over the counter. Nobody can come in. You can't allow anybody in. How do you pivot? What kind of an internet strategy have you ever developed? And if you haven't developed one, somebody's going to help you do that. So the combination of education, one-on-one coaching, and access to capital, those are the three things woven together that can create an opportunity for these under-resourced and underserved businesses. But again, the anchor institutions, I mean, WGBH has done study after study and report after report about the failure of our public institutions, as well as our private institutions, to buy goods and services from local businesses, from businesses in under-resourced communities, from Black, Brown, and AAPI, Asian-owned businesses. I mean, These are the people who need to be reporting on a quarterly and an annual basis the growth in purchasing. Two major healthcare institutions in Massachusetts just announced as part of a nationwide effort. This is talking about UMass Memorial and Bay State Health, that they're going to increase their purchasing of goods and services from local companies, mostly under-resourced, by $1 billion over the next 5 years. For every $1 million of business that goes into a Black or Brown-owned business, an under-resourced community, for every $1 million, it creates 7.5 jobs on average. Think about it. $100 million is 750 jobs. Those numbers are available. And when you think about building trades and construction, where so few Black and Brown owned businesses have been successful at generating revenue and growing, despite the billions of dollars we're spending, we got a long way to go. And I would challenge our largest institutions, and some of them have stepped up to the plate. Massport is a great example of one that stepped up to the plate and is doing much more work with BIPOC owned businesses. So capital, technical assistance, coaching, strategy, all those things woven together. That is why I'm so optimistic about the future, because I think we've at a moment during this racial justice and equity moment since May 25th of last year to achieve some tremendous opportunities. We've got the nonprofits that are there to do it, the coalition asking the Commonwealth for $1.1 billion of resources. We won't get it all, but hopefully we'll get some significant part of it that's going to change the playing field for these businesses.
I know we've got a limited amount of time. Some of us on the panel here, I know some folks have to jump. Do we have any questions from the audience? And recognizing just tech challenges, make sure that's possible. If someone wants to jump on the podium so we can see them or wave to us, or no, it was originally part of the program.
I have a quick question. Hi.
There.
I'm from a long line of entrepreneurs, and it wasn't until I moved to Boston that we saw all sorts of opportunities that existed for entrepreneurs in terms of meeting the right group, all of that stuff. You know, on average, African-American entrepreneurs only make up to $100,000 a year. Part of that is you're mentioning being part of these institutions, but there is such a distrust in the institutions. And what we have learned is there is such a good way to cheat with these institutions, where I know plenty of white men who have started businesses and now their wives' names are on it. So now it's a minority owned business. So how do we hold them truly accountable? And how do we get the community to trust the institutions again? Because again, my parents are really good entrepreneurs. They don't want to talk to those people. They don't trust them. So how do you develop that trust between the two?
So Edgar, I saw your head nod strongly, and also you are among this group representing the strongest institution. I'd love to hear your thoughts on this.
Yeah, so for years, and I'm glad that you mentioned that, for years, that has been kind of like the template where an institution would come in and provide some sort of rope to the community and say, all right, we're going to provide these resources for you, and specifically say it's going to be for Black and Brown communities, and then kind of have that debate switch. This is something that we're challenged with every day, and it's from the highest level, from legislation to all the way down to grassroots efforts. We partner with a lot of local organizations that specifically target the community of color, Black people, if you will. Some I would mention, BECMA, Black Market, you know, just a number in Boston alone proper that definitely speaks to the people of the community and speaks about the wealth and employment and business separation and bringing those resources to the right people. Again, as I said at the Revix Lab, we are there holding those institutions, those organizations accountable, making sure that we are providing it to the right people, and it's not just a situation where it's quote unquote minority only, but also being able to provide and in those accountabilities, making sure that we're addressing those needs appropriately. So we're one institution, and yes, it has to be linked to more. And as we expand the conversation more, there are more institutions that are going to be held accountable in that way. So we're doing our part in making sure that message gets out appropriately, and putting our feet to the fire. As they come to the labs every day, they're asking those specific questions. Are you actually helping Black people in the community? And I can say yes. And me being of the community and understanding the need, it's not like I'm a transplant coming in helping. I'm in the community, hands to feet, and in the mix, talking to the folks directly and providing the information they need to make sure that we're providing all the resources that's due to them.
That's great. Thank you for that. Any other questions from the room or from other participants who may be online?
Gustavo, you asked one question earlier.
Yes, please.
Ask it, maybe Betty or Jen can give an opinion here. If we had another, God forbid, if we had another pandemic or another circumstance, a shock like we experienced the last 18 months, what did we learn from PPP? What did we learn from the restaurant revitalization fund that was created? What did we learn that we could fix or do better the next time, so that so many businesses that were shut out in the early going and will never open again would have had the resources they needed in order to survive and emerge stronger? What could we do differently with the benefit of hindsight? Because there will be another shock at some point. We don't know when, hopefully 100 years down the road. Betty, Jen, any thoughts about that? Since Restaurant Revitalization Fund is certainly something you know a lot about. And
Great
Betty, you
question.
were there with PPP with all the frustration that you saw every single day when it was going to people who had the banking relationships, and all the rest of the small businesses, mostly of color, were getting shut out and turned down for months.
I believe you used the term SOL, Steve, on our pre-call, so technical term.
Yeah.
So I'll answer, and then I have to scoot out of this awesome conversation. But Steve, part of it is these emergency response programs were not necessarily designed for equity, or if they were trying, didn't take into account the system in which they were operating in, right? So with PPP as an example, the way to get the capital out was through mainstream commercial banks, right? Through the PPP program. And we already know that there's there's disproportion in terms of who is banked and super banked, right? Meaning who has the relationships with their bank that could quickly get them access to this capital. It's the bigger businesses, the ones with the connections, the ones with the relationships, and the smaller businesses that didn't have strong banking relationships, or that didn't even know this program existed, right? Could not access it. So part of it is, designing for equity to begin with, and having an infrastructure to disseminate the program. And that is what I think we all scrambled to do when PPP2 came out. Was we realized the infrastructure was designed against getting out this money to the businesses that need it most. And so we sort of did a Band-Aid approach, like the coalition that started to form, the PPP Equitable Access Initiative, which used all these TA providers on the ground to get the information out, because they had close, trusted relationships in community with these businesses already, and could help these businesses understand, like, you have this loan that's effectively a grant, take advantage for it, This is how you apply. It was the hand-holding that you needed, right, to encourage businesses. I actually did some of that TA myself personally with a focus on Latino-owned businesses that spoke Spanish, because I knew those were not getting this information. And there is a cultural resistance to debt, first of all. There's also a cultural resistance a little bit to getting help from the government. And so having someone on the ground trusted, like, I'm not saying I'm always trusted, but at least I knew that that was a barrier. And I could speak to it and say, here's how you should view this money, take advantage of it, and here's how you do it. And coming from me, it then felt like, okay, I can trust Betty, I'm going to do it. But it takes a lot of people, right, that have deep relationships in communities of color in particular, and to nuance the messaging and the information so that, as we put out more and more programs and more money is coming, it's going to be really critical to have the infrastructure to disseminate it. You talked about the CDFIs and strengthening them. It's also equally important to strengthen the community business or associations and groups that have relationships with business, because that's, again, how all of this deal flow pipeline is going to be very interconnected, right? It's not going to just touch one organization. We all have to be involved in supporting, one business at a time. So it's happening, but it's slow because it didn't exist before, right?
If I could just jump in.
If I can, oh, okay. Oh,
No,
go ahead.
Just super quick, just to say, Betty, I think that's totally right. And I think, this goes to Edgard, what you said about trust. Do we trust? Do I have a relationship? Therefore, what do I do? It's debt. I don't believe that I'm ever going to get that back. And so there is this, Betty, you said the word a design with a focus on equity. That is the key in all of these programs, because when we design from the position of, well, return on capital, right? I want my money back. The SBA PPP loan was that way. Traditional banks are very often done that way. I know Revex is doing some very interesting work on some new ways of putting their capital out. But the more we continue to work within the existing system, like this is where these businesses that were already undercapitalized do not work. And so to me, it is about designing from the perspective of those business owners where they really need. They need enough money. They need enough time to be able to like keep going to figure that out. If they don't have kind of that kind of, and cash, grants, cash, it's not going to work. And so back to the question earlier about institutions, same thing. If those institutions are just looking for their own, I get to tell my story, well, absolutely, then you are going to be treated as a commodity. Your business will be, it'll be a one-time thing, and it's not worth your time. So the question for all of us is, how do we actually move from intention into action in a different way?
Edgar, why don't you go ahead and add your comment? We've got like 2 minutes here before we need to
2 minutes,
wrap up.
that's fine. And I want to add to that, we were talking about deserts in the community. Yes, so even pre having their business established, there's a lot of businesses in the community that just were working on a shoestring, if not working at a deficit already, we spoke about, but even in their reporting that when the PPP came back around, they couldn't participate the first time, where the second time they had to do some sort of reporting in order for them to even be able to contribute to the system, right? A lot of these businesses that were in the community, whether they're cash business or not reporting because of the fact that they're on a shoestring budget, but then have staff they're paying under the table, whatever the case may be, may have lost. So now we have to then backtrack and go back to those businesses and say, hey, this is how we should be set up in order for, if this were to happen again, then you're able to participate. We saw that a lot in the banks as well, because of the fact that, these banks, these businesses were working in those ways. Still viable businesses in the community, but on the outside, it didn't even look like anything because they're not on the radar. So these are the things that we have to go back on a resource and talk to them about as well. So those are the things that are important.
We did.
Thank you for that, Steve.
Question.
Thanks for the question, Steve. I want to be mindful of time. I know, Betty, you may have to leave, and I know there's another panel. Is there another question up there?
Yes, one more question.
I was going to ask CDFIs, you have capital, I think, and our CDFIs locally. But can you identify other areas of the country where you would say there's a model CDFI community that does a lot of lending that you can share with us?
So,
California,
yeah.
Texas. I mean, these big states with large, minority communities knocked it out of the park. Like they have big, CDFIs that just stepped it up and did more of the PPP lending to the small businesses than here was more the banks, right? In those communities, it was the CDFIs that stepped up.
But there's a culture of CDFI lending out west, southwest,
Yep.
and it's been developed for years. And where does most of the money come for these CDFIs? It comes from the profits that are earned by Citi, Wells Fargo, Goldman Sachs, JP Morgan Chase, hundreds and hundreds of millions, billions of dollars being poured into them through their philanthropic arm. It helps them with their Community Reinvestment Act, and it creates a source of capital that is not quite as much of a straitjacket. And we could do well to think about a strategy to create a more well-developed network of CDFIs here in this region that could have a meaningful impact. We're creating all kinds of interesting and imaginative products and ways to operate. I mean, Boston Impact Initiative is a perfect example of an institution that went about it in an entirely new, bold, and imaginative way. But I think Betty would agree that we need scale in
Right.
order to finance these businesses that are overwhelmingly BIPOC owned. And that kind of scale, we need the major banks to be involved, and a CDFI network would help a lot.
I have to go,
Well,
everybody, but
yeah.
this is awesome. Thank you.
Thank you, Betty. I'll use this opportunity to thank you all for a really tremendous conversation. Thanks to everyone who's joining us online and in person. We started a little bit late, we went a little bit longer, so thanks for everyone for your time. Thank you to the Midas Collaborative team for persevering through the technical challenges. We appreciate it. We're happy to be a part of it.